Singh.
Thank you, Ritika. Thank you, Shailendra. You know, it's not often that Shailendra Singh agrees to speak at Conclave, so please give him a huge round of applause. One of India's most active investors, I think easily the biggest one.
I'm very honored to be here. Thank you for having me. I tried telling Chandra I'm not an AI expert. I think our team tried telling you that.
Mike.
Is this better?
Yeah.
Thank you. You know, I tried telling Chandra that, Chandra, I'm not an AI expert, and you're better off having other people in my team, because normally when I'm going to go speak at these events, they'll give me some, AI trends and other stuff to read beforehand. And yet
I'm not an AI expert either, so we are good.
Yeah, okay, all right. With that caveat,
But Shailendra, I remember reading something on Twitter. I think it was at some VC event. So when two VCs walked up on stage, they walked up with blankets, and people asked them why. And they said, you guys keep saying funding winter all the time. So you don't have a blanket. So should we assume that, there's no funding winter is ending? What signals are you sending?
Yeah, you're getting me started on a favorite topic. First, I think times when capital is scarce are actually very good times. So I always think, I hope such times last, not because we want great deals or we want, startups to struggle. But basically, look, all times when capital is scarce, it pushes founders to build a much higher quality company. And so it pushes founders to build a much sharper value proposition, to price well, to build an economically efficient businesses. There's less wasteful spending. The people they hired are less entitled. People don't accept offers and then not join, which is a common thing, right? Like in the industry. And so actually, founders find that it's a better time to build companies during times when capital is scarce, often also referred to as funding winter or what have you. So I actually think this has been a really good phase these last couple of years. And I do suspect it will change quickly. As we were just chatting outside, I think tech investing will pick up pretty rapidly in the next few months. But it's a healthy phase. And at least we've been pretty active. I just finished a full day session with our Surge team, for this our annual planning session. And, we have made, I think, 28 investments from the seed and Surge, pocket since June last year. So actually, we've been pretty active in the early stages. And I don't think it's been truly a winter, but I think it's been, maybe fall. But hopefully we'll skip winter, go straight to spring.
Great. This has also been an exciting year for you because, you almost got a new identity, right? From Sequoia India to Peak 15. And I remember talking to you when that rebranding happened and we were still figuring out, should we call this Peak XV, Peak 15?
Yes.
What is Peak 15? It's something related to Mount Everest or Himalayas or something like that.
Correct.
But, how has it been in the last few months? Has it impacted the perception you have in the market? Because then there was a sense that Sequoia is a very strong brand. You're letting go of that, adopting a completely new brand. Why should startups still take term sheets from you if you do not have that global parent backing you up?
Yeah, so, we were set up always as independent units at Sequoia. And so, honestly, it was a rebranding exercise. It's not like we were separating anything or there was any change of control or what have you. Our funds didn't change, the LPs didn't change, our teams didn't change, the investment strategy didn't change. So first, I think there's no question, however, I'm immensely grateful to Sequoia. We've had a wonderful partnership with them. If it weren't for Sequoia's backing, as you called it, for all these 18 years before, we wouldn't have been enabled to build a reasonably large VC business in India and in Southeast Asia. And so I think they've definitely played a huge role. But we were fortunate that it happened at a time when, we were able to already invest in several dozen unicorns. We were able to have, I think now we've had 19 IPOs, including 14 since pandemic or 13 since pandemic. And so, candidly, the India market is doing super well. And the market is at a stage where, the businesses being built here are world-class now. So I feel very fortunate that the rebrand happened at a time when, our business is pretty healthy. And look, for a living, what we do is we try to back founders. And what do founders do? Founders try to have, greater influence on their own destiny, right? And so the chance for us to become founders is an insane gift from our team standpoint. And we have been grateful and thanking our stars since June this year. So, rebrand is a new exercise, but we were fortunate to rebrand at some scale. So, we weren't starting afresh. We were sort of continuing what we did for the past 17, 18 years.
Got it. A lot of people this week, at least markets, are excited about the Fed talking about how the rate tightening regime is over. I remember in the last year or the last couple of years, whenever you asked, why are VCs not spending money, people said, it's related to liquidity in the US and a hard interest rate regime. But with a soft interest rate regime, do you believe venture funding will come back in full force? Because a lot of funds are sitting on a lot of, so-called dry powder. Yeah.
Yeah, I do think they're correlated. The reason is very simply that if the Fed gives you 5 or 5.5% risk-free, then what IRR you want to shoot for in a risky asset, let's say, especially in emerging markets where there's also currency depreciation, the bar just goes up. When risk-free rates are very high, the bar on risk-based IRR investing goes up. And then, public markets also have a big influence on this because, the multiples of companies in public markets influence the multiples of companies in private markets, right? So money moves between debt and equities. When interest rates start coming down, people start to have a higher tolerance for risk to seek better returns. So I do think there will be a structural shift back into equities from bonds and from treasuries and so on. And as public markets rally, I think, people start to effectively pay more for the same company in private markets as well. So I think if you watch carefully what's happening last 6 weeks, a lot of software infrastructure, et cetera, has already been rallying. There are stocks up 30, 40, 50%. There are multiple stocks up 2x this year since the start of the year. For the record, in January this year, we had a Sequoia Global council meeting. And I told everybody, I said, look, I think this is a generational buying opportunity in software. And it was clear that, we were at a multi-decade low if you looked at, or at least a 10-year low if you looked at average revenue multiple or EV to EBITDA multiple for the best software companies. And so it was only logical that there would be mean reversion at some point. Nobody knew when, but it had to happen inevitably.
Got it. Just some data points. So if I look at Indian startups, they recorded some 7 billion in funding till November 23, which is actually down 71%. However, a recent VC firm survey says that 50% founders expect fundraising to become easier in 2024. But they also said that what's keeping founders awake these days is that they need to make revenues. So, is that the new normal? Not just revenue, but at least revenue plus contribution margin positive.
Yeah, so I have this, so I've been reflecting a lot, and especially since we became independent. I was in the Sequoia office in September after this, and, talking to Doug Leone. Doug ran the firm for most of the last 2 decades, and most of during my time there. And I was telling Doug, why is the Valley so obsessed with blitzscaling? And this idea that when you find PMF, you have to go hard at it. It doesn't matter how much money you burn and so on. So I was asking him some of these questions.
To be fair, even you as a firm, you encourage startups to
So actually
grow.
all over the world, VCs follow these strategies. And I think, one of the things we've been reflecting on, if you look at India's success, and if you look at success of HDFC Bank, or you look at success of, our consumer companies, Asian Paints or, and others, what I think India has done really well is that in India you can find these consistent compounding businesses that will compound for decades and decades. So actually, I have been running these search sessions for 5 years. I always show slides to founders, and I say, hey, if you could compound for several decades, even at modest growth rates, you'd be shocked how big your company becomes. So I'll give you a real story. 2 weeks ago, I was with the founder, unicorn founder. The company has a couple of hundred, maybe 300 million-ish revenue. Won't give the name. And
are they profitable?
And they were saying pretty close. And the founder asked saying, how fast do you think we should grow next year? Should we grow And he was saying, look, in a base case, we can grow 50, 55%. If you push it, we can grow 70%, maybe grow 40% if you want to show more profits. And I said to him, honestly, I don't think it matters. What matters is, can you sustain even 20% for 20 years? Okay, which banks can also do. Because if you sustain 20% for 20 years, that's 38 times. 300 million times 38 is almost 12 billion of revenue. Okay, and probably they can do better than the 20%, because in near years they can grow faster. So I think if you ask me, my view is the thing I try to focus founders a lot more on is to say, are you making the right things? We can marry innovation with this idea of consistent compounding. Because if we can do consistent compounding in our best companies, we'll have giant software tech companies. The current startups of today, what we call startups, they will truly become enduring enterprises worth, 50, 100, whatever billion dollars. This math that I just articulated, 20 years of 20% is 38 times. This is just simple. Like if you can sustain a healthy level of compounding, that's the key. And what happens to every startup is, by the way, lots of self-goals. What happens is they try to grow too fast. They'll maybe burn up. And I always say this to founders, a unicorn, I call that an adolescent company. And what happens and by the way, my daughter is 13 years old, okay? So what happens in adolescence is people have very high potential. They're already very smart. Kids are very smart, okay? And they can fully argue with you, their logic is fully developed, their intellect is developed, but they don't yet have control over their emotions, okay? So they can't fully control their powers, okay? They might still throw a tantrum, they might still get easily upset, they might still scream at you. Okay, so I think of unicorns as adolescents. Their potential is sort of demonstrated, but they haven't yet built the full muscle, and they haven't gotten to enough of a steady cadence in life yet. They have yet to discover some things about the world. Okay, and many have yet to discover free cash flow. Many have yet to discover that there's no endless stream of capital raising and so on and so forth. Many have to discover that, hey, good governance will get you a better multiple in public markets, right? So again, coming back, look, I think for India, one of the things that could be unique, what my hope is, one of the things that could be unique is if we try to emulate the success of the TCS, the HDFC Bank, the Asian Paints, in our startup universe, where we can build these consistent compounding engines that can help build, enduring tech companies. And I think that should be our collective goal.
Got it. Shailendra, one boardroom upheaval that's captured, not Bharat, but one boardroom upheaval that's captured global attention in the last month has been what happened with OpenAI. And, corporate governance is something that you talk about a lot. So is there something that founders, VCs, other stakeholders can learn from the OpenAI crisis?
Yeah, look, it's very interesting. I find every bull cycle, look, human beings are very smart at being able to justify, exceptions, or being able to justify, why things should be different this time. Okay, we're all collectively as a group, very smart being able to do that. So for example, in OpenAI's case, of course, they said, well, this is for the good of humanity. They created a non-profit on top and so on. Look, I'm not close enough to know what happened there. I've read the same things you've read, Chandra. But it does beg the question, why was it governed that way to begin with? Why did people not have rights, and so on. But I do think, in general, what happens is startups are so chaotic, especially when they grow very fast, and especially when they're attempting very audacious goals. What happens is a lot of people, if you added a lot of process burden, you would slow them down and you would make life difficult for them. So a lot of founders, they want to go fast. They want to have lots of freedom. And over the years, gradually, people have been relaxing the governance burden in a way on innovation in general, on the founders that will be at the cutting edge of innovation. So this is manifested in many ways. This is manifested in some VCs who won't take board seats. It has manifested in even public companies where founders will have super voting shares. It has manifested in founders keeping board controls in various ways and so on, right? So I think what has happened, this is a gradual shift over the last, I think, 10, 20 years. And, like anything else, it's probably gone too far. And I think there's probably better need for recognizing that once companies get to scale, they're a few billion worth, or they're important to society in some manner, then it's the right thing for them to have great governance, and actually that will help make them enduring It'll help create the path for the 20-year, success and so on.
Is that something that VCs are also looking at more closely now, at least in
Yeah.
India, in terms of governance, the filters they apply?
I
Because
think
we
so.
hear about how, the levels of checks have gone up significantly.
Correct.
The phase where you would sign a term sheet over a weekend is perhaps over.
So actually, I think those things, very honestly speaking, another bull markets come, some new investor will try to differentiate themselves by moving fast. Okay. So I'm just telling you what I've now seen enough ups and downs, over the last 18 years. A new bull cycle will come in some quarters, and then somebody new will be excited. Look, I mean, it's no secret, India is the most exciting place in the world
Yeah.
to be investing right now. We get so many pings all the time from people saying, hey, what's going on in India? Will you educate us? We are coming to India. Will you meet us? And so, people will start to differentiate themselves saying, hey, we do less process, we do less diligence. We'll sign a term sheet quickly. I mean, in 2021, we would hear things like, we'll wire you money first, we'll do the documents later, some from funds, in other parts of the world. And so, look, another bull market will come, people will do these things, but I think it's not just about the point of investing because it's a competitive dynamic at that point, and people will try to differentiate themselves in different ways. But I think it's this idea that for you to build sustainably and consistently well for several decades, you then need to subsequently have some guardrails how around a companies run well and govern well. And I think it's especially relevant when companies get to triple-digit million revenue. So when a company is $2, $3, $5, $7 million revenue, if you put a lot of governance around them, honestly, you will stifle some innovation.
Right.
And you will make them move slower than they should at that stage. So I think governance has to be stage appropriate. And once companies get to a stage where there are large number of employees, and they're important for the ecosystem, they're important for their industry, then I think it's only incumbent that they should be well governed, and they should be there should be safeguards so they're around and serving, sort of the greater good for many decades.
Got it. Let me come. I know you began with a caveat that AI expert, but I'm going to ask you to give me broad points on this. What chance does India have of being a defining player in this, AI wave? Because on the face of it, we are GPU poor. I mean, research and talent poor. So how do we compete? Can there be really interesting startups? I know you invested in Sarvam.
Yes.
In fact, Vivek was there earlier today, and he literally got mobbed in the corridor. And it's India's hottest AI startup right now. But, can India be a defining player, and in what areas?
So first, I think, we are in the very early innings of AI. And while I'm not an expert, so, this is a real conversation. Earlier this year, I was at a global Sequoia offsite. This is prior to Rebrand. And I was telling my colleagues in the US at that time, saying, hey, we'd love to learn from you guys. And, what are you seeing in AI? What are you guys doing? And they were like, look, we don't know much either. Like, we're all learning together. So, like, if you feel like you don't know much about AI, which is how I always feel, and it's possible some of you feel, the good news is it's so early and it's changing so fast that there's time to learn. Okay, and it's going to take several decades before it fully plays out. So I think if you take a sufficiently long-term view, I think it's inevitable. India will be a very major player in AI. Actually, I think all countries will be transformed with AI. There's no question. And I think, given the fact that we have an enormous developer population, and we have so many software engineers, so many startups and so on, we will definitely play a very important role. In the very near term, of course, we are behind. Like, if you compare the cutting edge innovation going on in Silicon Valley and where we're at today, but I think it's too early. And there is a little, it is both real and it also has a lot of hype.
Is it also a function of, the talent? Because one point that Andrew made this morning was, so we asked him, who is ahead? And he said America is ahead because a lot of engineers quit from Google Brain, and, they are now starting up in the valley, and that's sort of given them the edge.
Yeah, but there's a lot of talent coming back. Like when I started investing early on, I give this story to many times to people. In 2006, the year I started, digital advertising was 39 million. All of India digital advertising.
Wow.
Okay. And of that 39 million, 30 million was Google. Okay.
I'm sure that is still the story.
Okay, so 9 million was non-Google digital advertising for all of India in 2006. So now I scratch my head saying, like, how would we build a big business then? Okay, like, why, like, what were you even trying a few years too early? Okay, this year I think it's order of magnitude between 8 and 10 billion. So I think, again, when you take a midterm, long-term view, in those days, if you try to find a product manager in India, there were no LinkedIn resumes that said product manager. There were no PMs. You could not find a PM. Okay? So I think what happens is talent develops pretty fast. The learning cycles have shrunk. A lot of the best talent I've encountered in my life is actually self-taught talent. So of course researchers and PhDs are very important, but there's also a lot of self-taught talent. Because in the end, like, I'm a big fan that the best people just keep teaching themselves. They're a learning machine. They keep learning. By the way, I'm a huge fan of Chris, who I already see here. And I think Chris was a history professor before writing the book on, on chip wars, on chips.
Yeah.
And his articulation on what's going on in silicon around the world is pretty amazing. And so, but coming back, look, so I think India will be an important force. I also think what will happen is big countries like India will be forced to have sovereignty in chips, in AI, and so on, and in their own data privacy, data protection, and so on. So I think the ecosystem will develop quite fast. We'll all be surprised. But this is a multi-decade trend, and I don't think anybody is behind. And it's like we are 100 meters into a 15,000 meter race. Yeah, some people can start off the block fast. It doesn't really matter.
Got it. So, Shailendra, as we wrap, I just have a couple of questions. Do you have an investment thesis when it comes to AI startups? Because I think Rajan Anandan said a couple of days ago, we're looking at AI. So what's happening?
No, we are, look, I just went through.
And I went through the search cohort. It is literally AI. Yeah.
We have quite a bit. It's no secret. We are pretty excited about AI. We are excited about the potential it has. I think we made around 20-ish investments roughly.
Yeah.
But it's important. We didn't start with AI last 6 months or a year ago. Our first AI investment, I remember going to, I started our Southeast Asia office about 10 years ago. And I remember going to Singapore on day trips, meeting 10, 12 companies every day. And after about 8, 9 trips, I met 2 PhDs who were building an AI company. It's called Appier. They were Taiwanese. And we backed them. They were like, okay, this is the best team we've seen. And their premise of building a more intelligent data platform that would allow people to have more ROI on ad dollars, this makes sense. And Appier is now a public company in Japan and still doing very well, growing very nicely in spite of this current environment. And so that was our first AI investment. That was in late 13, early 14. Okay, around this time 10 years ago of the year. So we started quite a while ago, but obviously there has been a tipping point with what you can do what you can do with co-pilots and agents and what you can do with a 7 to 15 billion parameter model. I mean, I'm sure this has been discussed all day, so I won't bore you guys with the same stuff you heard all day. But I think there's been a tipping point and applications become more intelligent. It'll drive productivity improvements. And especially for India, the relevance is, I think, how software is written, how software is deployed, how software is managed. That will change quite dramatically. So it'll impact all our services companies. It'll impact BPO in a pretty dramatic manner. But from a software standpoint, it'll also then create the opportunity for new maybe dev tools. There'll probably be AI applications for runtime management or for DevOps management or for how software is written and so on. So I think it's pretty exciting. It'll be pretty widespread.
Right. Give me 3 predictions of yours for 2024.
I wish I had the power to see the future, but I don't. So
you can tell me which of your portfolio companies are going public, how many will turn unicorn, how much will you deploy from the dry pod? I can give you leading questions. How much will you deploy from the dry powder you're sitting on? Mamaearth went public recently.
Yeah, we were very fortunate to be early investors in Mamaearth, and it's been a very nice investment for us. And we didn't, as you know, we didn't sell. We sold 0 shares in the IPO since, and we plan to be shareholders.
On hindsight, that seems to have been a good decision after the initial.
Yeah, again,
the stock has done well.
Yeah, again, comes back to this idea. If you believe in long-term compounding, and if you feel you have a high-quality customer proposition, it'll keep compounding over time, then it's good to be patient and stay long-term investors.
But coming back to the trends.
Yeah, so actually, let's forget what will happen in 2024. Because, again, it's the same way how I told my founder, it doesn't matter if you grow 50% or 70%. The question is, what do you need to do to keep growing for 20 years? So I think if you ask me, I think that's the more important question. And I think on that trajectory, I feel the India startup ecosystem is one of the best places in the world. Because as Rajan calls it, you refer to Rajan. Rajan says, we have these twin engines of innovation. We have this outbound innovation where we can build companies from India for the world, and we have obviously amazing things happening domestically, whether it's India Stack or FinTech or consumer or domestic propositions or things like Servam, which is, tech being built for India or AI being applied for Indian problems. So I feel we have a pretty incredible ecosystem, and we are pretty bullish on the next decade.
But do you expect more new economy IPOs to happen next year? I mean, the sense we've gotten from many bankers is that, people are just waiting for, the elections to get over, and then maybe we will see a rush of IPOs, because many of them have reached that stage where they are ready to file their DRHP and so on.
Yeah, so what we do, Chandra, is for many years, we have an internal metric we measure. By the way, we don't like the term unicorns because, it doesn't tell you whether a company is truly a good business or not. And, valuation is just an opinion at a point in time. Just tell you at some point in time, people were of the opinion that they should be worth so much. Okay, but what we measure is we measure how many $100 million revenue companies we have. Okay, because the reason we measure that is we think when a company crosses a $100 million revenue mark, call it roughly 800 crores, normally the 1 year forward forecast will be 30 to 100% higher because, our portfolio will tend to be a higher growth on the higher growth side. So if you're forward forecasting over 1,000 crore revenue, you're a large enough company to be a public company. So then, whether it's
how many
taking
such companies do you have?
Correct. So that's where I was going. So what I can tell you is in early 2017, we had 5 such companies. Okay, actually end of 2017, we had 5 such companies. At the start of the pandemic, so we have a slide which shows how many and how fast they're growing over time. At the start of the pandemic, we had 17 such companies. Now we have, I think, 46 such companies in the portfolio. So we have 46 companies over $100 million in revenue. So will there be many more tech IPOs? The short answer is yes. Because, all of these companies have some now, they're at the scale where if they wanted to be, they could be public companies in some time horizon.
Got it.
I think we have one that went public. We had 2 last year. 5-Star Finance went public last year, and then we had an IPO in Indonesia.
You also had Zomato and Freshworks.
Correct. Yeah. So we had both Zomato, Freshworks. So we've had 13 or 14 IPOs since pandemic, so we feel very fortunate. We have 3 or 4 imminently filing. But I think this 46, and I'm sure the industry has 100 of these or more, but I think there is now enough scale tech companies that we should be seeing a nice pipeline of IPOs, especially after the election.
Got it. On that note, thank you very much, Shailendra Singh, for speaking to us at the Moneycontrol Global AI Conclave.
Super grateful. Thank
you, and I hope you will stay back for Chris's session. Yeah.
Thank you so much, Mr. Singh. This was a great learning experience.